Why sales per employee is such a powerful number. Hi, this is Josh Horn, CPA of Horn Valuation. I help owners build, value, and sell their business. When I look at a business and they're over or underperforming, invariably they are either over or underperforming in sales per employee. And what I like about it is if you're not a financial nerd like me, it's an easy number to understand. You take the annual sales, you divide it by the number of employees, and boom, you got the sales or revenue per employee. Easy to calculate, right? And so I could show that to a client and go, okay, you're doing better or worse than the industry. And I'm going to go through quickly how you get this data if you don't know how to do it. But then I think the more important part is, what do we do with that information once we have it? What questions should we ask? And it's not just a simple bean counting, I'm going to cut costs exercise. I found that there's a little bit of a secret sauce involved in the types of things that companies are doing to make that number better. And so I'm going to go through that and get you on with your day. So what I want to show you first is the NAICS on the internet, right? This is the Census Bureau's classification of industries. And if you haven't done this yet, I really strongly encourage you to go out there, get on this site and find out exactly what industry you're in. Especially post-COVID, some businesses are doing something different than they were doing before. And so don't rely on your tax return. Many of the ones I get on the tax returns are wrong. Once I start asking the client questions, going out and visiting their facility, etc. It could be your insurance company has a code. Often they are wrong. You understand your business better than anyone. I recommend you go out there, go to census.gov/NAICS, NAICS, and do the due diligence to figure out what business you're in. And you can go in here, and I just typed in construction and enter it, and you can see all kinds of things come up. And you do have to go down the rabbit hole and figure out which one of these you're in. From here, you have what is hopefully a materially accurate profit and loss or income statement. And you can figure out top line, right? Top line sales, easy enough, right? So you have that number. And then the question is, okay, what is the industry average? And I use a source called Vertical IQ. You could use First Research. There are some other ones out there, and you do have to pay for these. And again, if you have trouble finding them, get in touch with me. Be a little careful with the stuff on the internet you just find willy-nilly. You could find something good, but just be careful with that. The source matters. And then you can compare that. Divide your sales by your number of employees and compare that to the data source that you've purchased or found. Now we're going to talk about the questions. Okay, you've calculated the number and you're underperforming. What should you do? What questions should you ask first? I've got 3. Are you leveraging every employee and every piece of technology to its maximum ability? What do I mean by that? Are you getting sales from just a couple of people and maybe not utilizing technology, in which case the weight of the world is on their shoulders, and if they get sick or they're gone, your sales are going to do this? Or are you getting everyone involved? I mean, with some rare exceptions, almost everyone in the company is going to have some opportunity to have an impact on sales. Or they should at least be shown why what they do matters to getting more sales, to getting more customers. All right, there are some rare exceptions, maybe a bookkeeper, for example, but even a bookkeeper might also be involved in collections with the customer. And so they're on the phone with the customer. That matters. There are some people that maybe work in the warehouse, but maybe they also go out and deliver products at some point. They all matter. All right, and are you getting everyone involved? The face of the organization, the image you want to project, are they doing a good job? Second, Are your fixed costs, including your administrative staff and your building, reasonable compared to other businesses in your industry? I valued a business and they were underperforming on this sales per employee metric. Part of the reason why is because they were spending a lot of money on advertising, driving top line sales, and they had a pretty heavy staff, which included some sales people. Now, if you take those salespeople out of the mix and that advertising, arguably those sales drop. So they were comfortable with that trade-off, but they weren't as profitable as, say, the maximum in the industry, right? They weren't at the high end of that, but they're comfortable with that and they were still making money. But maybe you're in a fancier building than you need to be in, or maybe a couple of those employees aren't as good as you would like them to be. Can you train them up? Are they just really never going to get there? Are they really adding the return on investment you need to move the dial? Finally, does your value proposition match your price? What's that mean? Well, I'm valuing a company and they are a low price provider. They've been the low price leader in their industry for a long time. However, they take a lot of equipment, bring it in-house, and do a lot of repairs and specialty work that a lot of their competitors don't do or they charge for. And this company I value didn't do that. That's a mismatch. You're charging a low price and you're providing a premium service. You need to get those on the same level. And generally what I recommend with most small businesses, because you really cannot compete with the biggest players in your market on price, you generally need to compete on specialty. Be better, do something they can't do, whether that's better customer service, a level of customization that they can't do. There are all kinds of ways to do this. But again, you've got to get your price and your value proposition aligned. If they're misaligned, you've got low revenues, low sales, and you've got higher costs, and that's going to squeeze you. This is Josh Horn, CPA, and this has been Why Sales Per Employee is Such a Powerful Number. Have a great day.